My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Finally, we busted the darn pattern.
That was easy.
Finally, the joy of the opening didn't turn into sadness and remorse. Just a few hours later, with the Dow ultimately gaining 237 points, S&P jumping 0.85%, and the Nasdaq at last doing something good.
House of pleasure.
Yeah, going up 8.2%. Sure, it might be a relief. Hey, you know what? In fact, it might just be a relief rally. But it got me thinking. If over the next few weeks we could somehow wrench all the optimism that I've seen for the last 2 weeks out of this market, you know what we could do? We could go back into bull mode. I have a theory that it could happen, but of course, nothing's that simple. We can't just have something to hang our hats. Remember, last night I had all the hats and I couldn't find any hat that was worth hanging on to other than the hat of the Communist Chinese. Who took my Communist Chinese hat? Well, we'll use this one, okay? This is the only one left. You need more things to hang your hat on. There are too many uncertainties right now, including the fact for the last 20 years, these next few weeks have been brutal for the stock market. We are entering a period that historically favors the bears over the bulls. But you know what? It doesn't have to be this way. You know what I'm going to do tonight? Rather than be real negative, I'm just going to lay out a recipe for how this market ultimately can get through these next couple of weeks, how it can keep going higher after they occur. I'm going to give you a 15-point checklist of what needs to go right before a rally can have real staying power. And unfortunately, I will stress this several times, you need all the 15 points. You know what? It's like Woodrow Wilson. Remember that guy? He was president. All right, first, we need some good news on the employment front. August not-so-hot non-farm payroll report has dogged us ever since we saw it, hasn't it? This is the single most important piece of data out there. If we can get a big number in a few weeks, then we conclude that the lack of expanded unemployment benefits is solving the labor shortage, although given that many states eliminated these benefits months ago, this is not a sure thing. Remember, this is not a checklist for the squeamish. I'm not going to come out here and say, hey, we did that. No, these are hard, okay? This is like chemistry. Not like, exposition writing. Remember that? We talked in that chemistry class, and you're going to get blown out. You're never going to get to graduate school. This is a little more like Chem 10. Second, inflation must moderate. Any business that's planning its budget for next year has to assume for once that maybe prices won't keep rising, because right now when you put pen to paper, they all do. At this rate, those businesses might not be able to afford to expand. Who wants to open up a second place to lose money if you're already losing money in the first place? If inflation moderates, something that could happen once we finish bouncing back from Hurricane Ida, well, that would be a huge positive. Third, just in terms of just pure boredom, frankly, the chip shortages need to abate. I was going to have Lay's chips out here. That's how desperate I am. It's pathetic how hostage we are to the semiconductor industry in this country. Historically, the outsourced chip manufacturers prefer to focus on high-performance chips, like the ones designed by NVIDIA or AMD, because that's where the money is. But that's causing shortages in more downscale chips. We call them feature-full chips. And that's the buck or two chips that go in to make your car work, all right? That's what drives autos. Unfortunately, the margins of these chips are so small that until we get more manufacturing capacity, the shortages could continue. And unless people say, listen, you know what, we're going to pay a lot more and work with you closely, these semiconductor companies aren't going to play ball. No one is expecting this problem to go away. Most tech executives, including Cisco's Chuck Robbins, whom we will hear from later in the show, think that the chip shortage is far from over. That's why it would be such a huge positive to suddenly see some relief in this basic building block of electronics that, frankly, I have never seen in all my career. And I traded Intel in the 80s. I've never seen this happen before, and it's gone on too long. Fourth item on the checklist, and this is related, we need to fix our supply chain problems. Right now, getting something from point A to point B is a nightmare. We don't have enough truck drivers. We don't have enough workers or factories. And we can't get the packaging we need because the demand for paper and plastic is too great. Factories are still shutting down thanks to COVID outbreaks and lack of vaccination. Yes, I do applaud all those people who think they have a right to get me sick, but I wish you'd go away. The rising cost of oil, the force majeure of paint ingredients, the endless wait for fixtures or washers or dryers. These shortages are freezing the economy. It needs to thaw if business is going to pick up, or that darn bathroom that was started in February of this year gets finished before year end, because I have had it with the contract. Fifth item, also related, the ports have to get better. I don't know how to do it. Are you a port guy? I'm not a port guy. But it's hard to believe that there's so much loot coming from East Asia that's simply not getting here on time, that you and I, if we got out there, we could do some things about it. I'm convinced about that. I'd like to go out there. I can get the trains to run on time. All right, what will this do for the holiday, this port stuff? Well, yeah, take a guess. It's going to make them awful. Fix the ports. Number 6. When earnings season kicks off, we need to hear that there's some light at the end of the tunnel when it comes to having supply to meet demand. Everyone from home builders to farmers to heavy equipment don't have enough product to meet demand. They don't have enough to sell. It was a good issue at first, right? Oh, but the demand is fine. No, it doesn't cut it anymore. 7, companies need to say that rising raw costs have finally run their course. Can you imagine a plastics company saying that? How about a paper company? How about a decking company? How about a plumber, an electrician, someone else who's been clubbed by these costs? Perhaps most of all, a supermarket or a retailer. It could happen, though, and that would really surprise people in a very positive way. That is one, by the way, that if it went up by itself, you could have a lot of others carry with it. 8, the stock market needs K through 12, as I called it when I was a K through 12 reporter. They need kindergarten through 12th grade schools to actually open and then stay open. Is that a good policy from a health perspective? Not my department. That said, I know it's good economic policy because K through 12 education is America's free daycare system. It will free up, it's probably in some states better for that than teaching, unfortunately. It will free up a huge number of parents to go back to work. You want to solve the labor shortage? As Secretary Gina Raimondo said on this show, Commerce Department, open the schools. Item 9, COVID hospitalizations need to decrease substantially, even if it gets cold, okay? Maybe that happens because employers are starting to require vaccinations. Maybe the Delta variant infects so many people that we finally have some semblance of herd immunity. Definitive decline in hospitalizations could send this market into overdrive. And it can't be episodic. We can't have like a bad weekend and the numbers come back again. 10, we need air passenger traffic to increase. The market goes down every time we hear about a decline in airline passengers, every time. Now, that could change, though, as people feel more comfortable with flying and international travel opens up again once we are better vaccinated. Which brings us to number 11. Hotel occupancy numbers have to improve. These are easy to track, and they signal many different kinds of spending, everything from shopping to restaurants. 12. We want rising interest rates caused by a stronger economy, not inflation. Don't fear higher rates. Fear rates that rise when the economy's not doing great. 13. New IPOs, please slow down. We need fewer low-quality deals and more high-quality deals like Dutch Bro, the really cool coffee chain I learned to love when I visited my daughter in Oregon. We want IPOs that are liked and not just flipped. What a treat that would be. This one's really essential because all the IPOs and SPAC deals are flooding this market with excess supply that we do not need. It's like cesspool backup. You can smell it. Item 14, more buybacks like Microsoft's to clear up the excess stock supply and inspire confidence in corporate balance sheets. Finally, 15, positive things that could turn around. Well, how about Washington and Beijing? They need to get off the radar screen. Every time you read about these, it's just all bad. Tax hikes, especially higher capital gains rates. You can make the market tremble just by reading the front page. I don't think Biden has the votes to make any truly controversial changes in the tax code. That doesn't stop this stuff from freaking us out. Before they think about raising taxes, they should do something useful like raising the debt ceiling. Beijing, come on, President Xi. Could you just stop it with the common prosperity for a couple of weeks? Your savage attack on Macau casinos has caused us to lose all appetite for any of your securities, and our markets are riddled with them. Now, there's one more ingredient to getting the bull back on track, more negativity. A relief rally like today, when we broke a high-profile NASDAQ losing streak, will attract too many buyers. But declines don't truly stop until the buyers are exhausted, not just the sellers. Remember, today's move was once again led by energy, which is the worst possible leader. Fortunately, tech moved higher, too. That's good news. I just don't want to see energy keep going up. Bottom line, we don't just need a handful of these positives before I can start feeling better about the situation. We need almost all of them. If we get them, the market will soar. But if we don't, then the next few weeks could be as brutal as advertised.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.